Assalamu alaikum, good morning, good evening, and good afternoon to all of you, and welcome to the inaugural edition of the ODES 2021 happening virtually. I hope you all are safe. You're following COVID norms, wearing masks, sanitizing your hands, and maintaining social distancing, and also in the process of getting vaccinated. We all know digital transformation, but can it be mentioned as an element of technical progression within a company that utilizes digital tech? I think it can be called as. In present times, there are many challenges that the oil and gas companies have faced, like prices fluctuations more than they ever have, geopolitical situations, technologies phasing in and phasing out faster than many companies can even keep track of. Disruptions, or we can call it as digital disruptions, has become a new norm in today's world. Going forward, oil and gas companies are actively moving ahead to embrace digital revolution and is now at the forefront of many types of emergent technologies, including artificial intelligence, machine learning, blockchain, augmented reality, and industrial Internet of Things. With prices fluctuating more than ever, business sustainability, increasing efficiency, and safe operations are driving the change to adopt to the digitalization. Digital has already become a key part of reducing costs, decision making, and productivity for most of the organizations, be it small or big. The price crash of 2008, 2015, and 2019 will remain fresh in everyone's minds. It has shaken up the industry and the digital solutions and come as a savior and become more common as go-to options for the organizations. Innovative concepts, the co-organizers and conference producers, along with Birba Energy Services, our co-organizers from Oman, would like to welcome you all to the virtual ODES 2021 that will focus on digitalization in oil and gas industry. The theme for the event is rebooting digital technology, now, next, and beyond. We have been fortunate enough to get the support of UPAL for our virtual event. We also would like to acknowledge the support and participation of Omani companies to the event. The conference agenda has been lined up with the presentations by global leaders and domain experts on an array of topics that will provide the attendees on the latest developments and
Can you hear us, Mohit? I think your screen got frozen. Is it only for me or is it for everyone?
No, it's frozen. We're not able to hear him.
No, we've lost him.
Yeah.
Is he coming back? Oh, no, yet.
Yeah, let's wait for him to come back.
Yeah, Nasir, we didn't have one of you. Now we have two of you. So that's good.
Is it? that's what we call.
Like you had to bring your twin, yeah.
So that's what we call digital twins. Ramajia guys can tell us more.
There
With
you
a
go.
different name.
Oh my God. But I think one of the areas.
I'm trying to make comments.
Yeah. I think my PC from work is blocked in one way or another to some of the accessibility.
I'm not sure if Mohit knows he's locked out.
Yeah, in London, we have been working home for, as of today, it's been 1 full year. So we've got all the technology working right on, perfect. I stopped calling it work from home anymore, right? It's live at work now.
I mean, the situation for me is the kids at home, the wife at home, and everybody's working, and it becomes a noise in the house,
Yeah,
But
very
I
true.
think we have tested the technology, and I think the situation has pushed us to to capitalize this situation.
Of course. Yeah.
I hope we are not live now when we speak this way.
I think we are live now.
Yeah.
Okay.
Mohit,
Yes, sir. Thank you, Mr. Abdullah. Moving forward, I think it's time to get set, go, and start the virtual ODES. I would like to welcome Indra, the Chief Digital Officer, Deputy Kane Oil and Gas Vedanta Limited. Nasser Mahruki, he's the Subsurface Technical Data Manager, Petroleum Development Oman. Garud Sridhar, he's a Technical Manager, Production Digital Solutions from Schlumberger. And we have who have kindly accepted our invitation to grace the occasion as the inaugural session speakers. Welcoming my dear friend and colleague, Mr. Parul Chopra, Director India, Rystad Energy, who's the moderator of the inaugural panel, to start the program. Over to you, Parul, to please start the program. Thank you so much.
Yeah, thank you, Mohit, for the introduction, and ODS for giving this opportunity to moderate this session. Welcome all the panelists and all the participants who are joining us today for this discussion. Before I go into the actual discussion, I just want to set the context on where we stand as of today, where the oil and gas industry stands as of today, given the place we are in. So the decade 2010 to 2020 saw two large downturns. The first downturn, which we saw in 2015, was around excess supply, which was driven by US shale. And we saw a good period post that for a couple of years where the service industry came under a lot of pressure to cut down costs, and many segments, they were sort of able to, manage that downturn by, cutting costs somewhere close to in the range of 30 to 40%. But as we were recovering from that first wave of downturn, COVID hit the industry. And this time around, there's a second shock wave that the industry is now dealing with, which is basically demand driven. When the demand has plummeted and long-term demand is also is being revised downwards. So how it impacted the long-term oil prices? So when we were around 2014-15, our assumption for long-term prices used to be close to $100 per barrel. The first wave put it down to $80 per barrel. Many companies were planning their future spending, forecasts, investments, etc., based on that underlying assumption. But with the second downturn, what we are seeing is that the assumption has come down further to somewhere close to $60 per barrel. So all the majors, all the big companies, they have recently done a lot of impairments in $1 billion. And they are sort of putting on hold large developments which were earlier financially viable, but now in the new scenario, they're not viable. With this second downward revision, again, it is impairment. It is important for especially the services industry to adjust to this this new ground reality where the prices are going to be relatively lower for a longer period of time, along with the sort of a shift that we are seeing, for large E&P companies, including majors, where they're making the transition to renewables, reducing emissions. We are talking about implementation of carbon tax, etc. So all of this is gonna come into play over the next decade, and the companies have to sort of navigate to adapt to this new reality, but also, you know, build their footing in this renewable industry at the same time while making sure the existing ENP production and financial viability of the projects remain sustainable, even though the prices are low. So when we are going through this, you know, sort of a sharp pace of transition, if you look at, you know, the industry, the long history of this industry for close to 100 years, you know, new technologies are definitely bound to play an important role. And this push has been there, especially on the digital front for several years now. And we have seen several applications of that in different sectors, in different verticals within the energy services industry to optimize costs, etc. So with this background in mind, I want to start the discussion on, you know, on how some of these digital technologies have been helping us, helping the ENP companies cut down costs, optimize their production, but also, you know, going forward now with COVID into play, you know, we have different issues like workforce availability, you know, personnel not being available, you know, some remote jobs that have to be implemented at a particular time. You know, so how the digital technology can be used sort of to, you know, mitigate some of those delays and lower down cost. But as a step further, you know, as we embrace renewables within sort of this big ENP companies, there are more avenues there on initiatives like smart grids, etc., where, you know, digital technology can sort of play a role and help us, you know, lower down carbon emissions, but also, you know, optimize some other costs within the sector. So with this starting point, I will move on to our esteemed panelists to you know, give their inputs on what sort of initiatives they have deployed within their responsibilities within their companies to, you know, sort of use digital technology to optimize costs, to increase production, but within these current times, you know, what other options that they think sort of are expected to pick up to even, you know, have a bigger sort of acceptance for the digital technologies in the energy services or, you know, ENP industry. So I would like to start with Mr. Nasser from PDO to share some views on that. I was reading recently about a large sort of an enterprise software which PDO recently adopted along with a company named Hexagon, where, you know, they are able to sort of do real-time monitoring of different on the field activities. And Mr. Nasir, I would like you to share some views on that, you know, how successful it has been, and what type of help it has, you know, been, how helpful it has been for you, you know, to be able to optimize costs, etc.
Thank you, Farhan. Assalamu alaikum and morning, everybody. I think one of the things where I would like to start with our business model. I think it's interesting to see, you know, we oil and gas business. One of the area where we don't have much of an influence or a decision making is our business model. We don't even know who makes decision in terms of how much we pay per barrel. So that model is a bit different. If you go to the supermarket, you buy something and you know exactly the price. So what we need to do as an organization, whether IOC and OC, is mostly optimize, you know, costs within project delivery, making sure that we deliver our projects in an agile way, we streamline our processes to minimize the costs without compromising the safety. But also is to make sure that we optimize our costs in terms of operation, is where we spend most of the money. And in doing so, we do have equipments which have been there over 40 years. How you sweat the asset with minimum cost and making sure that safety is not compromised. And in doing so, then that is where the contribution of area like lean, like digital technology, which comes in place to bring efficiency in terms of speed, the cost management, efficiency, and so on and so forth. Now, the most important is to have the agility of an organization to adopt into the new ways of working. And when we say we are digitally transformed, we are not changing our business model. We do have our business model. Our mandate today is E&P. But how do we bring the digital technology to bring that efficiency where you can optimize the cost to the minimum? Now, in doing so, whenever we discuss many areas within our portfolio, is to establish a common ground. When I say establish a common ground, it is not only looking into the technology. There are different dimensions on the way how you deploy technology and you sustain it. And in doing so, most of the time, the capability and human capital management tend to be left behind. And if you don't pull them together, and we call sustainable and competitive model, the human management is about building the skill set. It's about understanding what is going on in the market. What is it evolving it? Is there an area where some of the jobs will be eliminated? There is an area where some of the jobs will be upskilled and so on. This is about the work dynamic. It's about upskilling and reskilling it to prepare the workforce of today where they can respond to the future. And then it comes into the technology to open our eyes, understanding what the models of the technology we need to work. Is it a co-innovation? Is it really get the technology from a service provider embedded into our organization where we can accelerate the journey? It's about governance. How are we governing it? How do we make sure we do have a governor that bring that integration, especially when we talk on the area of data-driven innovation? These are niche technology. We've been doing physics for many years, and you are bringing the data-driven innovation to complement what we've done with this. It's not there to replace it. And most of the time when we talked about petrol, whether petrol, CMG, we're not replacing it. We are there to complement our data-driven innovation. Having a disciplined organization with a skill set to sustain it and to open our eyes, making sure that the market intelligence is in place to know what is going on and what is the model of moving forward. Now, all of these, they go together as a hand in hand as an ecosystem to make sure that we open our eyes, we identify what are the opportunities business driven, and where we invest the most with the major impact into the organization. So it's key to look at it. There are many dimensions that need to be embedded as part of the ecosystem to deploy this type of technology and being able to sustain it. That's myself.
Thank you very much, Mr. Nasir. Very, very useful inputs. And just expanding on this point, of sort of have a clearer visibility on cost, across the spectrum, to be able to decide how much the company is spending, and then only you can make a decision whether there is a further scope of optimization there. And I would like to take the discussion forward to Mr. Indrumna from Vedanta, and I'm aware that there are EOR projects being taken up by Vedanta in India, and obviously there cost optimization is an even important initiative. So Mr. Indrumna, can you please share some thoughts on that? How sort of you are deploying digital initiatives within the company, and how it has helped you to solve some of the actual real life problems.
Yeah, thanks, Parul. So before I answer your question about UR or any particular niche area, let me give a quick overview on how we are approaching digitalization in Kane Oil and Gas Vedanta Limited. So what we are trying to do here is like we ensure that digitalization is cutting across all the value chains and value levers of exploration and production cycle. So when we start, we ensure that the exploration, new field development to subsurface management, reservoir engineering, all these aspects are covered by one or the other digital intervention. Coming to petroleum engineering, workflow automation, to artificial lift surveillance, to surface critical equipment monitoring, applying predictive technologies to understand when and how a subcomponent or a component is going to fail, and extending the same to the enabling functions like your health, safety, environment, security. When I'm talking security, the physical security is very important because we operate in an area which is remote and it is largely spread. And just to bring some perspective, we have almost 58 blocks in India, spreading across 65,000 square kilometer, right? So the security aspect and administration aspect is also important. And what I feel is that digitalization has got a lot of scope in that as well. So to summarize that, we have an end-to-end digital roadmap that we have built for exploration to production. And if I want to give a couple of use case examples, so let me give an example from one of the fields, which is our highest producing field in the northern part of India, in the state of Rajasthan, where we have RJ Oil is one of our biggest asset. We have three fields there, Mangala, Bhagyam, and Aishwarya. So in Aishwarya Upper Fatehgarh Reservoir, what we have done is like we have water flood as well as a polymer flood. And we have tried to incorporate both AIML techniques as well as the first principle based traditional model of reservoir engineering, club them and see that how can we improve the water flood optimization. So when I'm talking about water flood optimization, it is like you have injector wells and you have producer wells, right? You need to understand how the injector wells and producers well are connected so that if you are trying to change a lever in the injector side, you will be able to produce more from your producer. So that's the whole objective, so that your cost is minimized, whereas your production is maximized. Now, if you put into an objective function and want to solve it through LP or NLP model, you cannot only depend on traditional models, right? If you have the power of ML, where you have production data of last 4 to 5 years, you bring them, you know, this is the injectivity index, and this is how the production profile is changing, feed it into the model, and then see that with my surface constraints, when I'm talking about surface constraints, the water is not the resource you can waste in today's world. It is constrained. You have a finite amount of water. With that, how much additional barrel you can generate, you can put from subsurface to surface. So this is one of the example which has come to my mind. I think it is very relevant for the UR kind of a processes. And to if I have to take up another example, maybe I will go to an example where we have optimized our artificial lift systems through the techniques of digitalization. So we have implemented model predictive control for ESP based pumps, electrical submersible pumps, so that the again, without violating any of the surface, subsurface, and well-related constraints, we are able to extract maximum number of maximum amount of oil from subsurface to surface. So that's the intent. But here the thing is like we have ensured that the advisories or your recommendations are not only restricted to the paper. right? Because what happens is that your IT layer and the OT layer sometimes are not really connected. But here we have made sure that it is fully connected. So whatever recommendations are coming from that MPC layer, it is directly going to the VFDs of those ESPs, or it is getting communicated with the DCS or the SCADA system. And actually this digital project is extracting more oil from the subsurface layer. So that's how the things we approach in Kane Oil and Gas Vedanta. So perhaps I will share more experience and some of the other digital interventions in the due course of time, but over to you, Parul. Thank you.
Yeah, thank you very much, Mr. Indumana, for those very interesting examples on how you are using, digital technology to optimize production and, reduce cost. I move on to Mr. Garud from Schlumberger, who is head of digital solutions within the company. So, Mr. Garud, please, share some instances on, which are some of the successful digital initiatives Schlumberger has taken up, and in the current times, which are the sort of new requirements that you see from the E&P firms, and how they are being developed and being deployed in the industry.
Yeah, thanks, Parul, and great to share the stage with some great horsepower here. Yeah. Look, I mean, from an oil field service standpoint, obviously we want to make sure we provide the best to the E&P, right? Whether it is NOCs, independents, IOCs, doesn't matter, right? At the end of the day, it is a unit cost. I think Nasser mentioned that, Indra mentioned that. At the end of the day, it's unit cost. How do we make sure with the least amount of resources, so the optimized amount of consumption of resources, you maximize your production? And that's the objective function you're going to. Now, I've always believed, if I take myself out of the oil and gas space, for me, digitalization should help a person do his or her job faster, easier, better. So you work smarter and not harder. Yeah, that's the whole mantra behind what I've believed when it comes to digitalization solutions. So I've focused a lot around last mile automation. I think Indra mentioned that as well. It is how do you make sure that at the least cost point you're able to convey that so-called advisory, like he mentioned, to the to that particular apparatus, which is required to do something so that you can get that act of action or that impact of change, right? So we know in the realities of where we are today, we have remote assets, we have there's a cost of data, there's a cost of data transmission. How do you make sure that that all this wealth of information which is being captured at the well site is actually put in front of somebody to make the decision? That somebody could be a human being, an expert, or could be a system. Yeah, and we have starting to focus a lot more on moving that to what the industry terms as the edge, yeah, at the well site. So and in layman terms, can we get that computer to the well and make sure that the decisions are taken at that last mile, right, at that well level? So a lot of focus around that in terms of how to make sure that at the lowest cost point, this advisory can be translated in an act of action. I think we all are in this age where we have access to a lot of data. We look at predictive methods as one of our direction to help us make our decisions better. I always contend that if it's like predicting a death of a human being, right? I mean, it's as good as somebody's guess, and of course you have a little bit of leading indicators, you have a little bit of points which you can say, oh, fine, this person drinks a lot, or this person smokes a lot, or there's a lot of meat consumption, the diet is not healthy, etc., and therefore that person might die earlier. But it's still a stochastic stochastic number at the end of the day. And I've always believed that you make the human being live a better life make sure the diet is good, right? Make sure that exercise is good. Make sure that drinking is curtailed. Make sure that smoking is curtailed. That person will live longer. So how do we make sure that these apparatus in the fields, drawing an analogous to human being in this particular case, performs better, right? Just makes sure that the operations of that is as smooth as possible, so that the life is extended as much as possible to positively target that unit cost, like we discussed. So I think personally for me, the next level of innovation, the next level of and by the way, it's happening. It's not I don't want to make it sound that we are way behind in time as an industry, but how do we make sure we deliver that at the lowest cost point possible, so that operators, ENP, NOC, doesn't matter which profile you're in, can adopt those to deliver their promise to the market.
Yeah, thank you very much, Mr. Garud, for sharing that viewpoint. Yeah, so obviously there's always this sort of contrast that obviously you want to minimize the cost, but at the same time you want to maximize the productivity. So ENP companies have to find a balance where they do the right type of investment, and sort of strengthen the or have a long enough life period of an asset, but at the same time, make sure the costs are not, going out of the budget. Yeah. Mohit, do we have some questions, or should we carry on with the?
No, you carry on. If questions come in, I'll ping you.
Okay, sure. I just want to hear from the panel if they have any sort of experience with deploying robots on the field, doing some automation, let's say in terms of drilling or subsea maintenance. Do you see some sort of those initiatives also being deployed to save some cost?
See, I'm not very sure about deploying robots into actual field, but at least from digital perspective, what I can say that we deploy bots in automating and making your workflows automated in different enabling functions as well as operational workflows. So we have deployed robotic process automation to tackle some of the repetitive work which happens in some of our enabling functions like your procurement and finance, because I think not only the NOCs but ENP companies like us have a very rigorous process of procurement, and it is a very detailed process which every procurement has to go through, right? So starting from a PR generation to PO issuance and the commercial rounds, RFP process, there are a lot of repetitive processes which can be really solved by RPAs. As well as let's say when we are exposing some of the interfaces for interaction with internal external stakeholders, we have also brought chatbots, so that some of the initial load gets reduced from the internal people who are supposed to answer those queries, and the queries which are getting posted from internal and external stakeholders, they're also happy because some of the routine questions are getting answered in a more human way immediately. And sometimes you are really not able to understand whether it's a human answering those questions or it's a chatbot who is answering those questions. So those are some of the examples which I have on top of my mind. But on the production side, maybe somebody else can take that question.
Okay. Yeah. Nancy, you're muted in case you're saying something. No, it's still.
We are not able to hear you, Nasi. You have to unmute yourself.
Okay, you can hear me. I think fantastic. We have done it, but not to the extent of drilling it. I think not yet reaching that level. I know in certain areas like logistic, where there's a robot which can pick up equipment very quickly and bringing it to similar, like Toyota and so on. And this is where PDO has invested time and effort aggressively on this. So whenever there are opportunity where we see on lean in areas like Toyota and what we tend to capitalize. But I think going back is mostly on RPA. RPA has been very interesting on robotic process automation. And initially, when I was called for RPA meeting, I was looking forward to see a really physical robot. And I realized it's mostly an automation. But this is to be honest, it is something small, but a bigger impact in the organization. And when you look on a bigger impact, there are a lot of repetitive activities which are happening in the organization. I mean, take an example like, workover proposals and so on. These workover proposals are repetitive. And the RPA can play a bigger role to automate it, where an engineer comes more from an assurance part. Definitely, you're not replacing a human being with RPA. Somebody has to make sure that this information has been generated, and really it is what we are looking for in terms of operation. So it's a big change, and I could see it already in certain area in PDO on invoice payments and so on, where invoices are created. They are automated in SAP up to approval process, and then is assured by the contract engineer or the contract holder and so on. So these are some of the opportunities which we're looking at. But the most important what I have seen it is about the foundation of the data, because all of these are data-driven innovation. And if you don't have proper data, and if you do not lean and simplify the process, then you go on retuning and retuning and retuning it again. So it's important, the first thing before we even kicked off on these RPAs, to make sure that our process are simplified, they are lean, where you removed all the facts in the process. You do have the data to drive it. And when these are in place, then definitely when you roll out the RPA, then it becomes more sustainable with minimum cost of support and maintenance and so on. So something where many people sometimes don't see is, I'm a developer by background, so this is mostly automation, but this automation play a bigger role and efficiency to remove facts within the organization. Back to you.
Yeah, thank you very much, Mr. Nasir. And I agree, so one which, digital implementation does is, it captures data from all the different sources, which were previously being lost. There is high transparency, the data is readily available for the management to make quick decisions. But I want to go a step further, here, because we often hear talk of AI along with this data in the sense of, predictive modeling. So at this point, obviously the management is, making the decision based on the data that is being put out. But there is this possibility also, where AI is sort of, looking at sort of past learnings and, sort of being able to give its own suggestion on, what is the right approach. How much should be what type of proppant should be used, how much should be used. Let's say if you talk about shale drilling, even in EOR, there's always a question, how much injection has to happen. Do you see any instances on your end, where even AI is coming into play, not fully, but at least helping you arrive at a decision? Okay, this is the right step that we should do, and then someone processes that and takes a call after that.
Yeah, so it's true. And I think one of the areas where I'm looking, we are working on those. This depends on the maturity level of each of the area. But the foundation is the data, because AI is the data-driven innovation. And when you build the data, you build this, AI on machine learning, the deep learning is mostly you are pulling the data for a period of time and identifying what are the patterns really that contribute into the failure of equipment. And we're doing it currently with ESP and the beam pump with two of the vendors. and also the production optimization. But I think one of the areas where I could see is many people in the market tend to think that the AI is going to replace the physics within a short period of time. No, we're not replacing the physics. I think your approach is we are complementing the physics. When you come up with a field development plan, it's about a 5-year plan. But when you drill more wells, then you sweep you end up on sweeping some of a specific wells where you intend to you plan to drill it. But using an AI with and business insight with the latest data tend to identify sweet spots which may help you even not to drill into those areas. And really, it will focus on cost optimization because the single well costs millions of dollars. If you identify there are no opportunity in that area, it's a dry well, then you can move into other areas. And this exercise has really brought a business insight from our side to say how these two together, physics and data-driven model, complementing to support the future on understanding, what has to come up, what are we anticipated, is there, we anticipate the ESP pump will fail. Now, when you can do that, I'm going back to Garun, who was talking about extend the life. In oil and gas, we call sweating the assets. If I know the characteristics which will contribute into the failure of equipment, then I can manage it better. And when I can manage better, then I can extend the life. But beyond that, you look at it is mostly taking it to the next level of saying it. There are a lot of mobile units moving in terms of repairing those equipment. Also, those can be managed in a better way, where the cost play a bigger role in this. Back to you.
Yeah, thank you very much. Mr. Garud, I will take the discussion to you. To share some instances of AI.
Yeah, no, this is a fantastic point. Yeah, and for me, and I think Nasser hit the hammer right on the nail's head. Right, the I is extremely important. The AI gets wrapped around that. Right, you cannot forget that you have the intelligence before you start talking about artificial intelligence. Right, so there's a lot of these physics-driven workflows which are not going to disappear. I mean, these are not something which are there to go. The data is only going to augment it and help you arrive to that particular response as fast as possible, right? That's where you want to get to. Now, there is applications of this are the sky is the limit, yeah. And in a very recent case, scheduling is starting to look like a very interesting value propositions for this as well. We derive all these workflows. We say, yes, we have to go do this in the field. We have to go do that in the field. We have to make this happen based on the intelligence augmented with the artificial intelligence in the office to advise that, correct? But then the application of that in the field might have real life problems which folks in the office might not have access to. I mean, the roads might have been flooded. Yeah, the wellhead might have been under an intervention activity which maybe didn't get updated in some database. So there are these real life problems. So how can a technology driven approach help optimize that? Because all this is cost. Every single time an operator spends replanning an exercise is dollars directly gone out of that particular bottom line, right? So there are a lot of opportunities here, which I think we have to think about from an AI standpoint. Low-hanging fruits, even before you get into, equipment level, equipment level prediction decisions, etc. I think there are a lot of low-hanging fruits in terms of use cases one could think about. And back to you, Parul, but that's just that I want to tell. I think Nasser's point is right on target.
Thank you very much. Now moving forward to some questions. We have got some interesting questions from the audience. So I will read out the first question, and I think if any of the panelists can sort of see if they can take this up. So the first question is from Dr. Arun Kumar Ranganathan. He says that what are the main challenge areas in deploying digital transformation to water flood environment or ESP automations, and what aspects you ought to focus on in planning such transformation?
So This is to me, right?
Yeah, I think you can take this up. Yeah.
Okay, sure. See, the main challenge what I see here in case of water flood optimization is like, I think Mr. Nasir has also covered that, is that how good is your data? And the data, if it is good, then you are going to get a good model out of it. And you also need to start engaging all the stakeholders right from the beginning, so that there is no doubt about the capabilities of the model and what is going to yield. The kind of expectation we have from this model is like, if you just want to take a mathematical model, maybe it will yield 90% accuracy, right? But in this kind of AI/ML based model, when you divide the data set into two parts, like one data set you are using for uh, building the model, and then you have the test or validation data set which you are using for validating the model, the accuracy you might get in the range of 60 to 70%. Now, 70% accuracy for a model is not at all bad. It's a very good starting point, and that's the mindset change we need. So it's also about a little bit of cultural change. We have to understand that these new technologies and the techniques, whether it is water flood optimization or an ESP failure prediction, or let's say a screen out prediction during your hydraulic frac job, or let's say your predictive analytics for surface equipment where you are trying to predict when the bearing is going to worn out, or your input filter is going to choke, or let's say the pump seal is going to fail. We have done everything. And we have in the process of doing and implementing so many things in the field. But I think that the expectation needs to be set. Data needs to be good. Not only data needs to be good, the plumbing and the piping of the data from different sources needs to be good, and the expectation needs to be set. And there has to be a continued buy-in from the management. Like, yes, I am invested. Let it be 60 to 70% accuracy in the beginning, but I know that it will improve over the time. So if you can bring all these things together, then only I think a digitalization effort that you are putting in your organization is going to be successful. So that's 2 cents from my side.
Yeah.
Can I add one point to that, Parul, if you don't mind? What
Sure,
Indra
sure.
just said. I think it's right on target. You know, for me, when you specifically talk about water flood, as somebody brought this up as a use case, it is how do I make sure that the optimization result, right? However it is derived, whether it is the more traditional analytical based workflows or numerical based workflows, doesn't matter. As soon as you derive that, there is a value of implementing it in the field as soon as possible, right? So the more delay you have from the point of that, let us say, deriving that optimization to the time you implement it in the field, so detection to action perhaps, the shorter that window, the more value the operator should be able to realize, because the optimization is done to give value, which is increased production, lesser consumption of resources, whatever the KPIs around that are. So I think just to kind of, just to kind of add on to what Indra rightly mentioned, I think one area where the improvement can happen is by operators perhaps putting a little bit focus on detection to action as being one of the, a time-based KPI, maybe. So the shorter that window, more value one can realize from that digitalization effort, and in specific to the water flood or any other flood we are talking about.
Maybe, if you don't mind, I can add a comment here. I think I just want to you really emphasize on the customer expectation. I think that's really important. And one of the areas where we need to be very careful on these AI type of initiatives is we need to prototype, because we were looking on ESP failure prediction on one field, and that AI for another field is different, because the conditions also are different and what. So these conditions are different, and sometimes if you look at it, the customers think that you do have one model, you plug in tomorrow, and it works for everything. It's not. And one of the areas where I really emphasize on under what you said is getting the 70% accuracy of the model is fantastic. And this is scalability, and fine-tuning the model is part of the business. And that's why we need to invest on capability, the skill set of being able to do it. The core innovation with, service provider, like Schlumberger, Halliburton, and what. This is one of the success stories, because you do not want to rely on, a service provider to come and sit down and calibrate your model. You need to build that in-house capability and agreeing, strategic direction, how we work together as a core innovation to support our business in optimizing the cost without jeopardizing the safety. Back to you.
Thank you, Mr. Nasir. Just a correction. So the previous question was from Mr. Suleiman Al Siabi. The question from Dr. Arun Kumar Ranganathan is that what is your take on autonomous drilling with the technology powered usually core drilling operations moving to autonomous mode or not? I can give some quick answer to that. So what we're seeing is that even though some sort of robots are involved in drilling, there is not full automation. What we've seen is actually deploying these on the rig helps save some of the costs. So actual drilling cost can come down by 30%. But not more than that. Still human intervention is required on the rig. There are safety concerns. Everything cannot be automated. But this does have a scope to reduce cost, and which is the need of the hour. So if we deploy this on a more wider scale, it will definitely help us lower cost. But it will definitely be an upfront investment in the beginning. But over the long term, it can save some cost. But at the same time, from the safety perspective, I think this is something which will help, free up some manpower and reduce any HSE incidents related to that. So that's my sort of a short query answer on this query. If anyone else has some inputs, please feel free to add. Okay, all right. So moving on to the next question from Mr. Nasir Ashuwali. He's asking if every speaker can give one instance that they did last year during COVID pandemic to reduce cost in their organization. Yeah, who wants to go first?
Okay, I can take up it first. So I think during the COVID-related lockdown, when it started, everybody agrees that we have a dual whammy of an unknown pandemic hitting the globe at the same time, all the operations, all the countries. But for the oil and gas industry, it was more than that, because the crude prices went below $25 a barrel, right? So we have to really understand at that point of time that whether the operations are viable or not. And what we have done at that point is we try to make economic model driven operation. When I'm saying economic model driven operation, all the economics of oil extraction has been already done, right? So what's new in that? So what we have tried to do is the cost of operation is divided into your capex and opex, as well as in the opex you have fixed cost as well as your variable cost. Now we have concentrated on the opex because and the opex side as well, we have concentrated more on the variable opex part, because the fixed opex is always there, you cannot remove it. Now how can we optimize that variable opex part? And how can digitalization help in this aspect? So what we have done, we have understood that out of all our producer wells, what are the resources are getting consumed, and how can we allocate those resources to an individual well? So when I'm saying it, it's very easy to say, but if you want to do it on the real-time basis, believe me, it needs to have a lot of discipline and a lot of data plumbing and a lot of data integrity challenges. So what we have done, okay, if I'm using this much volume of water, polymer, chemical, power, how can I know that my producer well number one is consuming this much of resources? If I know that, then I will be able to find out the exact well-wise variable OPEX dollar per barrel, right? Once I know that, then the equation becomes very simple. Whether this particular well is viable or the other well is viable based on the kind of crude price fluctuation is happening. And in the stand-up meeting, what we have in the morning, the SBU president can take a call immediately. Okay, do we operate all the wells or do we take out these wells? But mind it, we are not only going to shut down a particular well, then we are actually losing that marginal utility or the marginal production. But we are also going to understand and reduce and optimize the resources that has been allocated for that particular well. So we try to go in that direction, and I may not say that we are 100% successful, but we have made some significant progress, which I can very well relate with cost optimization, which has been forced by the COVID-19 related pandemic. Thanks.
Yeah, I think this is a great example of the times we are in. There is a high sensitivity now to, to the economics of fields as well as the wells, as Mr. Nimna is talking about. And here, this sort of digital transformation becomes even more important. So first is, there has to be transparency at the management level on, economics of each and every well. And then there has to be a model on top of that, where you can plug in some numbers on cost, etc., and see, which well is going to give you more buck for your money. And there has to be some predictive modeling also. So in the past, when so much injection happened, so this particular well, this was a type of response that this well had. So obviously, you want to sort of optimize, the resources of wells which are more productive, and this transparency has to be there at the management level, because as Mr. Indra mentioned, it's in the morning meeting, they are taking a call on which wells to sort of optimize, rather than having some time to to cover this data and comment at a decision. So that's why digital transformation is even more important, to have a much clearer visibility and be more productive in this really sort of dynamic times, where price variation continues to be a big factor in terms of how we want to decide our day-to-day operations. Yeah. Should we move on to the next question, or Mr. Nasir, do you have something to add here?
Okay, so maybe a simple one. I wouldn't say the COVID-19. I would say the impact of COVID-19 has impacted the supply chain of oil and gas business. And that impact of the supply chain definitely dropped the barrel cost per barrel up to $26 per barrel. I think this is where we were struggling. And some of the EOR type of operations started struggling because they hit more than that. So if you cannot strike even balance of the cost of operation and the cost of what you're selling, then you struggle how you sustain it. Now this has brought an impact, a wave within the way how we operate in PDO. So quickly, part of our agility in the organization is to start focusing on $20 company. $20 company means you focus on the projects which really only will come up with unit cost of $20 company. If it's more, then pick it. And one of the areas where we started looking at it, maybe it's about $22. How do you bring digital technology to bring the speed, efficiency where you can load down the cost? And one of the areas I think went pretty well during COVID-19 was mostly on a drilling sequence optimized. So when we were pushed it on the cost reduction, number of rigs were reduced, and in order to reduce the rig, we were still pushed it, you need to maintain the production. Maintain the production with the number of rigs. Then you can do so much on the spreadsheet and you will not be able to do. We developed an AI technology, which really pulled many stakeholders from well engineering, assets, the function, engineering operation, to see how we can really optimize our drilling sequence, making sure that we produce as what we promised with the limited resources and constraints. And that exercise, where you could do it within less than half an hour, where this is an exercise part of the business plan used to take months and what. So it's mostly, if you look at it, COVID-19 has contributed into the oil price fluctuation by distorting the supply chain, but the technology has played a bigger role. And one of the areas where I'm seeing is in many of the organizations is most of the time, whenever they talk about cost reduction, they will chip into digitalization project. But if you look at it, maybe those digitalization projects cost $1 million, but the revenue is about $10 million. Let's look from a bigger picture point of view than only pinpoint into this area. That would be my steer moving forward.
Excellent. This is great to hear. So, if I have to summarize this discussion, what we can sort of conclude is that, COVID-19, as Mr. Nasir mentioned, has accelerated the process for digitization. It has become even more paramount to have very clear visibility on, how costs are going to play out, and, management has to have even better control on what is the profitability of good projects. If you follow big companies, big majors like Exxon, Chevron, BP, they are today talking about projects which have a break even of less than $35. So even though the prices are close to $60, they don't want to move with sanctioning of the projects, which is the break even of 40, 45, because they don't, you never know what's the average price is going to be going forward, and don't want to risk capital in those projects. So as we see that, from the comments from different speakers, I think this is going to be even more important for E&P companies to adapt digitalization in their work processes, in their management of day-to-day affairs, so that in case prices fall, or their viability has to be reviewed more closely, they have all the data that they need to make the right decisions going forward. Yeah. So with that, I would like to close this inaugural session, and I again want to thank our very esteemed panelists, Mr. Nasir from PDO, Mr. Indramana from Kane, and Mr. Darud from Schlumberger, for sharing their views and trying to paint a picture of what's happening on this digital front in their respective companies. Yeah, thank you very much, and thank you, Mohit, for facilitating this as part of the ODS session. Back to you.
Thank you.
Thank you.
Thank you, Garud. Thank you, Nasser. Thank you, Indra. Thank you, Parul, for sparing your valuable time from various time zones, coming across over here and glorifying the inaugural session, which was talking about the theme of the program, and it went off. All the questions that were asked were defined very clearly, where the industry is heading to and how the digital revolution is going to take the oil and gas industry to the next level. So it is giving a push to all the operations, safety and other issues by utilizing various digital solutions being developed and being used by the E&P players. We have PDO, I think one of the major players of Oman. We had Kane, which is one of the major players in India. And we have Schlumberger, one of the largest oil field service companies in the world. And Parul from Rystad Energy, that gave the whole combination of the inaugural session, and which went, all cylinders were getting fired and good questions were getting answered. Thank you so much. Thank you all. With this, we conclude the first session, and we look forward for your continuous engagements. And if you would like to listen to the second session, to the further sessions, you can exit from here and you can click join session in the sessions tab on the main floor. So you will be able to listen to other presentations. Thank you very much. Thank you so much.
Thank you.
Thank you.
Thank
Thank you all. Take care.
Thank you.
Bye-bye.